Okay. Good morning, guys. Can you all let me know if you all can hear me and see a screen? Yes. Can see a screen. Yeah. All right. Perfect. So today we'll start from where we stopped yesterday. I think we had to stop early yesterday because I had a power cut and it went on till around 5 in the evening. So we'll start with the 2014 paper. I think that's where we need to start with, and we'll get going. Okay. So today's class, guys, I'll go until around 8:30 because I need to run to work as well. So we'll go until around 8:30. Most likely, I think I should be able to finish around 4 to 5 years of papers. Okay. Now, so we'll start with the 2014 paper, question number 33. Okay, so some questions, guys, I already have given you all in detailed explanations during the last 3 papers that we did. So questions like that, I am again not going to give a very detailed explanation because we've already done that before. So question 33 says, public goods are not provided by the market system because, what do you all think? Why does the market economy not provide public goods? I explained this to you all in a previous question. Things like street light, things like national defense. Why does a market economy who is profit oriented does not provide these? Because even if a cost is incurred in consumption, a profit cannot be earned, a price cannot be charged, and non-rivalry in consumption. Those who do not pay a price cannot be excluded, and non-rivalry in consumption. Even if a profit can be earned, a cost is incurred in consumption. Even if a price can be charged, it cannot be easily implemented. There are very close answers, guys. Which one do you all think? Which one do you think is the most correct one? I'll cut off some obvious answers, right? We can cut off number 5, right? Number 5 says even if a price can be charged, you can't charge a price. Even if a profit can be earned, you can't earn a profit. And even if a cost is incurred, even one sounds a little off. 2 or 3, which one's the better one, guys? 2 says a price cannot be charged and non-rivalry in consumption. 3 says those who do not pay a price cannot be excluded and non-rivalry in consumption. Which one do you think is a better one? Bit tricky. Okay. I feel 3 is a little better. Can someone check what the past paper answer says? Both are almost the same. Past paper, what does it say? 2 or 3? Right? I'll explain my logic behind it. What does the past paper say, guys? 2014 question 33, 3, right? Okay. So this is why I feel right now. This is what I'll just explain what was running in my head. So just to see whether you all understand my point of view. Now, guys, when you take, let's say, something like street light, okay. Now, both of these answers are correct, okay. Remember, we need to go with the most correct one. So if you take something like street light, okay. If you take something like street light, it's a public good. If the government really wanted, okay, now let's say government has a cost of providing street light. No? If the government really wanted, they can come and say, look here, every month you pay 100 rupees. Government can come and say, look here, we are providing a street light to your lane. So every month, pay 100 rupees. So theoretically, government can charge a price. But people won't pay that price. Now, even remember I gave you my past paper class example yesterday. I told you if I really wanted, I can say every month students for our past paper class pay 500 rupees. I can charge a price. Yeah, I can say, look here, pay 500. But will you pay? You won't pay. I can charge a price. A price can be charged, but theoretically or practically, you won't pay. Why won't you pay? Because even if you don't pay, you will not be excluded. Even if you don't pay, you can come. So with that argument, 3 sounds a little better, right? Those who do not pay cannot be excluded. So that is why they don't pay. That is why they don't provide public goods. Now, number 2 says a price cannot be charged. If you really dig deep, you can charge a price. You can charge a price, but no one will pay. So practically no one's going to pay. Okay. 2 says a price cannot be charged. No. So more really, it can be charged, right? It can be charged, but no one would pay. No one would pay. Because what? Because they won't be excluded. They won't be excluded even if they don't. So even if they don't pay, they won't be excluded. So even if a price is charged, lamai, you can't earn anything out of it. So that is why 3 looks a little bit more correct. Is that fine? Yes. Better. Yes, small things, right? Now, if 3 was not there, definitely 2 is correct, okay? So when there are very 2 close answers, you need to figure out which one makes a little bit more sense. Okay. Then there was number 5. Why not 5? Even if a price can be charged, it cannot be easily implemented. Again, sounds okay, but that doesn't talk about the non-rivalry part. Even that part is a little bit relevant when it comes to why the private sector doesn't provide it. Okay. Because that doesn't talk about that. So 33 is answer number 3. Then we'll go to number 34. This is a little outdated. They say public debt of Sri Lanka as a percentage of GDP shows a declining trend in the recent years. Public debt as a percentage of GDP has not been declining, guys. If you take now these 2014 or 10 years ago, no? So from 2019 to around 2023, okay, not 23, now it's 22, no? We don't have 23 yet, okay? So for these years, okay, it has been increasing. So let me just show you the actual numbers a little. Let me see if I can find it. Public debt to GDP. Oh, that's on the fiscal. This is not the central bank report, guys. These are the statistics that they published in the middle of the year. Did I open the correct one? No, I opened the wrong one. Fiscal, or is financial sector? No, government finance. Public debt to GDP. I will anyway be giving you all the numbers that you need in the final seminar. I'll put everything into one document and give you all the numbers. Debt to GDP. Okay, here, right. So outstanding public debt, if you all want, you all can take a screenshot of the page. Okay, you see, Laman, as a percentage of GDP, right? Look at the last number that is there here, the 85.8 here. Okay, the 85.8 there at the very bottom. This is the public debt to GDP number of Sri Lanka, right? So public debt as a percentage of GDP. In 2018, it was a 85.8%. In 2019, 89. In 2020, it was 104. In 2021, it was 110. So that means our debt is more than our GDP. And in 2022, it was 118.7. So this is our what? This is our debt to GDP. So the 2014 question says debt to GDP has been decreasing now. Our debt to GDP has not been increased. That's a little outdated of a question. Our debt to GDP has been increasing. So if you really want to figure out why has it been increasing, how do you find debt to GDP? Your total debt divided by your GDP into 100. No, that's what you get a percentage. So here, look at the number here, the public debt number here, the one given here in red. You see, in 2018, it's 13,178,418. In 2019, 14 million, 16 million, 19 million. Now look at this case. Look at from 21 to 22. Last year, how much it increased by? Look at the, in nominal terms, in rupee terms, there was almost a 50% increase, right? Just last year alone. Now, when you say debt, guys, these are accumulated debt, okay? This is not the debt for that year. This is the debt that we have been carrying. So in 2018, we've had, these are all rupees in million, okay? This is not just 13 million. This is 13,178,418 million. Okay? So if you add 6 more zeros to this, you will get the number. That's the actual number. All of these numbers here are given in rupees million. Here. This is all in rupees million. So you will wonder, so 13 million is nothing. So vehicle itself is 13 million. Why can't they pay off? Right? These are not billions also. If I am to give this in billion, I can add 3 more zeros. So these are in billions. So if you add 6 more zeros to this number, you get the rupee term. Actual rupee number. Okay. No, if it's in billion, I can cut off 3 more. So it is 13,000 billion, close to 13,000 billion in 2018. In 2022, it's 28,000 billion. So can you see it? Just within the last 5 years, right, in nominal terms, in rupee terms, how our debt has increased. See, 13,000 to 14,000, fine. 14,000 to 16,000, 16,000 to 19,000. But look at last year, 2022, 19,000 went to 28,000. Yeah. Why? Can you give me one reason why do you think this would have gone up so much in rupee term? One is just we definitely borrowed. Also, just try to think. Okay, there could be an inflationary impact. Another big impact, Lama, is now see, even now, just think, as a percentage of debt to GDP, it didn't increase much, right? 110 became 118. 10 became 18, right? A small increase. Here, 19,000 became a 28,000. How did it go up so much? Right? It almost 50% it went up in rupee terms. GDP decrease, but GDP decrease means your debt to GDP should increase even. The main reason, guys, is the depreciation of our currency. Our last year, now all the debt that we have taken in dollars, the foreign debt that we have taken will now be converted as not 200 rupees a dollar. No. Now will be converted as 360 a dollar last. So as a result, went up so much. That's why in rupee terms, our loans are very high. In dollar terms, it would have been a shape increase, but in rupee terms, why it went so much is because of the dollar depreciation. We don't have to go to very detail into what these are, guys. Now, for example, public guaranteed debt. Now, I do work with this in office and all. That's why I know where all of this information is. But in simple terms, public guaranteed debt is like this, guys. Now, if you have, for example, the Ceylon Electricity Board, these fellows are always running on loss. Right? Electricity Board, always running on loss. So what they do is they take loans. They take loans from BOC. They take loans from People's Bank. So those loans are guaranteed by the government. Government says, look here, even if Ceylon Electricity Board doesn't pay, I will pay you. That's what you call public guaranteed debt. The government guarantees the debt that these state-owned enterprises say. So at the end, it falls on a burden to the government as well. That's why that part is over there. Okay. So there is the, guys, y'all can, in your, for your paper, most likely, rather than the final public debt figure, the total outstanding central government debt figure is a better thing to write. The first number here, this is what we, it's there on my tudes and all, total outstanding central government debt. Now, central government debt is directly the government's debt. But in addition to that, there can be, for example, these public guaranteed debts and all. And as a result, only you have the total public debt. Yeah. These were the numbers I would have given in my tude. 78.4, that I don't think I hear the whole number. Here, in 2021, 100.1%. In 2022, 113.8%. Okay, so those things. I'll anyway be giving this to you all in the final seminar with all the latest updated figures. Then also you all can go through. But for now, just have that in mind. You can use this when you are writing answers in the mock exam. Okay, so basically what did we learn? Sri Lanka's debt has been increasing. Now this again, guys, can be a very current context related question. I will plan and cover this in our seminar on fiscal policy. Okay, so why it has been increasing, what can we do, what are the problems of this, you know, that. So remember, Sri Lanka has been increasing. So therefore, I will not discuss this answer. Right? This is outdated. We don't really care. The reason why Sri Lanka's public debt to GDP has been increasing, on one side, if you take 2022, okay, it has been, how do you calculate your debt to GDP? It's debt over GDP into 100. Now, in 2022, what happened? Our GDP also fell, right? Because of, if you take our real GDP, that fell. But if you take our nominal GDP, now, usually, guys, these kind of things, you calculate using your nominal GDP. So in 2022, in rupee terms, now remember, guys, we say that we had negative economic growth for 2022. Our real GDP fell, but our nominal GDP last year increased. Why? Why did Sri Lanka's nominal GDP go up? Real GDP fell. Real GDP was around 77 billion US dollars. Our nominal GDP went up mainly because of inflation level. Prices went up. Not that we produced more goods and services, but last year prices went up like crazy, no? So as a result, Sri Lanka's nominal GDP increased. Okay, in rupee terms, the nominal GDP went up. But along with that going up, our debt increased even more. Right? So GDP increased because of inflation. This is nominal GDP, yeah, not the real GDP. No, nominal GDP increased mainly because of inflation. Then debt really went up because of the currency depreciation. So because of the currency depreciation, because our now all the debt that was calculated at let's say 200 rupees a dollar. Let's say we have taken now big loans now from abroad. All what was converted at 200 now has to be converted at 306. So this is rupee terms. Okay, so in rupees, our debt went up because why? Our currency depreciated. In rupees, our GDP went up because of inflation, but the debt went up even more. That's why our debt to GDP actually increased. Is that okay? 2014, 34. Yeah, we'll go to 35. Right. Okay, this one is also easy, Lamai. Social benefits are higher than private benefits. Where? Guys, first of all, social benefit is higher than the private benefit in what type of externality? The benefit to the society is greater than the private benefit. We learned this. I gave you all some numbers also, and I gave you. Where? In a positive externality in consumption, no benefit. Remember merit goods. So you're coming to this class. Remember my example. When you come to this class, your private benefit is 100. And then, you know, your friend also asks you a doubt. So you get an external benefit of 20. You get an external benefit of 20. As a result of this, not you, your friend gets external benefit of 20. As a result, what happens? The entire social benefit of you coming to class is 120. So they are saying social benefits are higher in private benefits. Where? When there is what, Lama? When there is a positive externality in consumption. So can you tell me where do we have a positive externality in consumption? In which one? education and health services, infrastructure and environmental conservation activities, ports and airports, roads and hospitals, national parks and environmental conservation. Come on, we've been talking about the example also for some time. Which one? Number one, right? Education and health services. Merit goods gives a positive externality in consumption. Now, most of the other stuff, guys, now, let's say stuff like environmental conservation activities, they are not consumption activities, no. They're more like production activities, no. So let's say there is a group, they are going and planting some trees. Maybe they are cleaning a river. Those are like more like production activities. Now, education is consumption, health services, consumption. Okay, that's why one is a better answer, and this is the answer that we talk about in all our tudes as well. Going to 36. Supply side policies to promote production. Now remember, Lamai, in our syllabus, when we talk about these policies, government policies, there are demand side policies and supply side policies. So this is aggregate supply, this is aggregate demand. To control aggregate demand only, we have two demand side policies. What are our demand management policies in our syllabus, Lama? What are the demand management policies we have? Which policies control the aggregate demand? We have the monetary policy. Remember, monetary policy also controls aggregate demand, no, by controlling money supply. When you control money supply, you control aggregate demand, and thereby you can control the price level. And also fiscal policy. Government expenditure and government revenue will control aggregate demand, thereby you can control price level. So fiscal policy and monetary policy, monetary unit number 7, fiscal unit number 8, these are what you call demand management policy. And then there are some policies that you can use to control your aggregate supply. Now, those policies are what we call supply side policies. Supply side policies. So to control your aggregate supply. It's not a very big part in your syllabus. It will be there at the end of unit number 8 as a small part. So under supply side policies, guys, what are the things? So supply side policies, Lamai, are the policies that are there to promote aggregate supply, to increase the productivity and promote aggregate supply. Which one do you all think can be the answers? Production subsidies, deregulation, tax reforms, nationalization. Yes, nationalization is not a supply side policy. Privatization is a supply side policy. Why? If the state-owned enterprises are privatized, sold to the private sector, productivity improves. Private sector will cut off unwanted people. They will try to, let's say, automate certain stuff. But nationalization means it's going back to the government. Then back again, there'll be corruption, low levels of productivity. So remember, nationalization is the opposite of privatization. Privatization is only a supply side policy. Okay, so one is wrong. Tax reforms, again, this says nationalization, wrong. Regulation, again, wrong, guys. As supply side policy, if you want to improve aggregate supply, you have to have deregulation. You have to remove rules and regulations. If you go and put 1,000 rules and regulations, then it becomes hard, no, guys, to supply the good. Government says, okay, if you have to, this thing, you have to get this standard, that standard, you have to only do this, you have to only do that, right? That is going to be a barrier. So if they deregularize, if they remove rules and regulations, then it's a supply side policy. So here, they're saying regulation, no, therefore wrong. Then production subsidies, expansion of administrative and development activities, deregulation and trade restrictions. Again, is this one. Trade restrictions is again not really a supply side policy. We'll see if the fifth one is better or not, and we'll come. Tax reforms. Okay, now what are reforms, Lamai? Reforms means changes. So if they make positive changes to tax system, maybe for example, let's say government says, foreign direct for investments, if you all come in for the next 5 years, you don't have to pay tax. We'll give you all a tax holiday. Making changes like that is what you call tax reforms. Then privatization, selling the state-owned enterprise to private sector. Remember, guys? Remember, I told you the enterprises that Sri Lanka is looking at privatizing recently? Was there, I think, in one of the mock exam papers? Yes. Remember. What we are looking at privatizing can be a question, okay, because they are talking about privatization a lot. Then deregulation, removing rules and regulation, and also labor and capital market reform. Yes, when they say reforms, those means positive changes, right? Now, for example, a labor market reform can be, let's say retirement age is 60 years, and now they increase it to 65 years, something like that. Capital market reform, that's on investment, the share market, stock exchange, these treasury bills, treasury bonds, right? Making a change there is what you call capital market reform. You don't have to go into detail as to know what and what these are. Privatization, have a little bit of an idea because it is a current trending topic they can ask. Apart from that, each of these you don't have to know in detail. So fifth one, Lamai, is your answer for a supply side policy. It's directly there in your tute. All five of this is directly given in your tute as supply side policy. Is that okay? 36. Fine. Questions, problem. How did you all do so far? 1, 2. We can skip this. 34. 3. 3 out of 3. Yes. Yeah. Right. Perfect. We'll move to the next.